first I want to introduce Kent. What a great friend. And, you know, he's the guy that helped us pull a lot of this together. Of course, the former director of the National Homebuilders Association. We've known Kent for a long time, and he is one of the best connected people in the housing industry. And he just connected us with all the right people on our advisory board. And now he has an opportunity to introduce them. Kent, let's hear from our advisory board. I'm very excited to hear from this panel.
Thank you so much, Clark. And certainly a great program so far, and a special thanks to you for founding the Ivory Prize. We wouldn't be here if it wasn't for you. As you said, we do have a superb advisory board, and I would love to introduce them now. I'm going to do it in alphabetical order. First, we have Carol Galante. She is the I. Donald Terner Distinguished Professor in Affordable Housing and Urban Policy at the University of California, Berkeley, and the Faculty Director of the Terner Center for Housing Innovations. Hi, Carol.
Hi, Clark. Thank you for having me here, and thanks for Kent for doing this panel.
Great. Natalie Gochnour is the director of the Chem C. Gardner Policy Institute and is the Associate Dean at the School of Business at the University of Utah. Natalie.
Hi, Kent. Thanks for having me on the panel today, and thanks, Clark Ivory, for putting this Ivory Prize on.
Laurie Goodman is the director of the Housing Finance Policy Center at the Urban Institute and in Washington, D.C., and also is a vice president for housing policy at the Urban Institute. Laurie.
Well, thank you very much for inviting me to be here today and for being a judge on this for this fabulous prize. Thank you.
Chris Herbert, managing director at the Harvard Joint Center for Housing Studies, and also teaches at the Harvard School of Design. Chris, good to have you.
Ken, it's great to be here. Clark, thanks for including me. It's been a wonderful experience. So exciting to see the winners today.
John McManus is the vice president and editorial director of the residential group at Hanley Wood. He has responsibility for a number of print and digital publications such as Builder Magazine and Affordable Housing Finance. John.
Honored to be with you all today. Congratulations to the Ivory Award winners. Looking forward to the panel, Ken. Thanks.
And last but not least, Ryan Smith is the director and professor of the School of Design and Construction at Washington State University and the founding partner of an enterprise focused on industrial construction called ModX. Ryan.
Thanks for having me. Thank you for having me. Looking forward to the panel.
That's great. Of course, Clark is a member of the advisory board as well, but we're just going to dive into this. What we're going to try to do today is to really focus on three topics. One, we are going to talk about the impact of COVID-19 on housing, and really not just the challenges, because they're rich and many, but some of the solutions related to that. Second, some of you have submitted questions, and we want to try to have a question and answer related to some of those questions. And then third, we'll have some concluding thoughts from the advisory board on the Ivory Prize overall. So let's dive into what's going on around us. This is obviously a confusing time. It's a time of serious disruption. Clark talked about uncertainty for housing. And we're going to talk about all those issues, but we really do want to also, as a advisory board panel, to focus on how we can adapt. What are the innovations that are needed, and what are the solutions can come out of that? And so I want to start with you, Natalie. I know you've been working and very much involved in a blue ribbon response task force that the governor of Utah has put together to deal with this challenge. And I wonder if you could talk about the framework of that as it relates to housing, and then also any of the recommendations you have. Now, I have to remind our panelists that we love to talk, but we're going to all try to be brief today so that we can do it in a timely manner and finish in the next 25 minutes. So please, Natalie.
I'll be brief, Ken. I've been working on something, I'll hold it up here just to kind of show. It's called the Utah Leads Together Economic Plan. It's a recovery plan for our state. And I think the lessons learned that would be broadly applicable. Number one, it's so important at a time like this to have a plan. And it doesn't need to be perfect. If it's directionally correct, it will provide a structure for people to build from. Second thing that we've learned is in the plan, we introduce economic phases to our state. The idea that you have an urgent phase that we're in right now, that will move to a stabilization phase, and ultimately a recovery phase. And this kind of structure has given businesses in our state, including home builders and realtors, the ability to think about the timing and how we're not always going to be in this urgent phase, and that indeed our adaptations and the fiscal stimulus and the things that we're doing to move past this crisis, the medical advances, will eventually get us to a better place. So these phases are very helpful. And then the third and last point I'll make is that we all know the value of testing and data to inform our decisions. And I think the other panelists and those listening will find it interesting that in the state of Utah, we will be launching what I'll call large-scale random field testing statewide to get a handle on what we need to know about this virus, so that as we move through these phases, we can have more of a dial, more of the ability to target public health measures where we know the virus is, not just people that are showing symptoms, but because of the random nature of our testing, we can see below the waterline in the proverbial iceberg and actually see what's going on in our public health environment. So you need a plan, economic phases provide structure, and random testing can help with reactivating the economy. I'll turn it back to you, Kent.
Thanks, Natalie. And I really do like your phases, the urgent, the stabilization, and obviously with an eye on the recovery, because it will happen. Carol, I just read a paper that you wrote, very good, Lessons from the Great Recession for Today, Housing Aid Now. I wonder if you could share a few of your observations there, and especially if you can talk about the challenge for renters, and then that obviously involves landlords as well, and then homeowners, and that certainly oftentimes involved the lender in that process. So thank you.
Sure, thanks, Kent. And maybe I can just take a page from Natalie and say that the blog post that I really just felt compelled to draft early on here was I was having this deja vu of having been in the Obama administration in the middle of the worst financial crisis that, we'd seen in a very long time since the Great Depression. And, here we are in the midst of, what appears to be really the worst economic crisis since the Great Depression, and maybe even beyond. We don't know yet, but I really felt compelled to talk about some of what I was feeling and seeing in the response, the governmental response today compared to what we did during the Great Recession. And during the Great Recession, I really, the first lesson that I take away for today is that we simply did not do enough to keep people in their homes. And that's in their, the homes that they owned, and today in the homes that they rent, which is a little bit different than last time around. But we have so many people losing jobs, losing income, that it is critically important in that emergency phase, as Natalie talked about, to provide the kind of income support to those renters and homeowners to ensure that they can stay housed, and at the same time ensure that the lenders and the owners of those properties, if it's a rental property, can continue to pay their bills. And we have seen some great progress in that, in that first stimulus package, but there is more, in my view, on that emergency phase for housing that we need to be doing much more specifically, that we did not do, frankly, during the Great Recession. And part of the reason we didn't do it is because we did not collectively as a society quite understand how bad it would be when you unravel a system of market finance and keeping people, having people end up being foreclosed on or and needing to start all over again. And that we can't repeat that mistake, I believe, this time around. So that's number one. Number two, again, riffing off Natalie, is we will recover from this economically. And we need to be doing things today that are putting in place the kinds of efforts that we're going to need to continue in housing production, for example. We are still going to need more people, more homes for our population, and we need to be working on those regulatory reforms to ensure that we keep the productivity going and accelerate it so that when our economy is stronger, we're going to have in place the systems and the policies to ensure that we can get back to work and get back to building homes quickly.
Thank you, Carol. That's excellent. Chris, I know that the Joint Center for Housing Studies has kind of pushed back the state of your signature report, the State of the Nation's Housing Report, so you can focus on this pandemic. Related to what Carol was just talking about, obviously any suggestions you have, but in particular, there have been a number of stimulus packages that have passed. The real question is, what happens when the government subsidies run out?
Thanks, Ken. Yeah, the Joint Center is slated to put out our State of the Nation's Housing Report in June. And really at this point in time, I think we just felt there was no way to know. And we wanted to put it off until we have a chance to have a better sense of whether we're in that stabilization phase and what does it look for recovery. I think Carol's touched upon a lot of what we need to do. And certainly the unemployment extension, the benefits that are being extended to more people, longer period of time will help and help supplement some of that income. I think when it runs out, those folks are in big trouble. The other thing is that I think we need to think about even if we find ways to keep people stable now in terms of having things like eviction moratorium, foreclosure moratorium, it doesn't relieve the debt. And so we have to think about what are going to be the loss mitigation tools for homeowners, what are going to be the ways in which we get assistance to renters to make sure that they stay housed. Carol put it well. I mean, when you think about someone not paying their rent, there's the impact on that household, but then there's the impact on that landlord. And those landlords, as much as we might want to think of them as large conglomerates, they're all a host of different landlords. And so we need to think about their financial health and then beyond them, the financial system. So you're right, when the government subsidies stop, we're thinking about this as a 3-month crisis and not a 6-month, 12-month, 18-month crisis. We're going to need to think about both how do we extend to those who need it, and also how do we think about giving the people the resources they need to make up that deficit and recover. So I know there are a lot of people who are thinking about using existing funding channels. So we have things like housing vouchers that are administered by public housing authorities. We have the home program administered by states and localities. Those are good ways to get money into the system, but there's also going to be a whole host of people who are affected by this who were not previously eligible for assistance. Their incomes were too high before, but now affected. We estimate that there are about 4 million renters who are making more than 80% of AMI, who are now suddenly going to be severely cost burdened as a result of this. And so there's going to be a need to expand that safety net as well.
Thank you very much, Chris. Laurie, your expertise is housing finance, and I know that you're having a special webinar next week on the supply issues. I wonder if you could focus on finance for a minute, and especially as it relates to what happens when people can't pay their rent and if homeowners can't pay their mortgage?
Yes, well, it's very different for homeowners than for renters. If you're a homeowner with a mortgage backed by a federal entity, such as Fannie Mae, Freddie Mac, the FHA, Federal Housing Administration, the Veterans Administration, you're actually in pretty good shape. The CARES Act allows you to forbear your payments for 6 months with the option to extend the forbearance for another 6 months. The money must be repaid, as Chris mentioned, but the repayment plans range from paying the accumulated balance back over 5 years to moving it to the end as extra payments, depending on who backs your mortgage and your circumstances. We estimate that approximately 70% of homeowners have mortgages backed by these entities. If you have a mortgage that's in a bank portfolio or in a private label securitization, then the rules vary by entity. The issue on the mortgage side is even though the borrowers can get forbearance when it's needed on government mortgages, the servicers have to continue to make the payments to the security holders even though they're not receiving the funds. Many of the independent mortgage bankers don't have the funds to continue to advance even though they're going to eventually get paid back. Some sort of liquidity facility is going to be needed, or many mortgage bankers are going to go under, which is going to leave the system with insufficient capacity in the long run. The issues on the renter side are in many cases more severe. If a renter is in a building with a federal mortgage, they have 120 days of eviction protection, or if they're covered by some sort of a state or local eviction moratorium, then they've got eviction protection. However, eviction protection, as Chris mentioned, is not nearly the same as rental assistance. Many of those who have been laid off do have an extra $600 of unemployment insurance a week, which helps a great deal. It's greater than the base level of insurance for many people. However, there are a lot of others who fall through the cracks. And some workers that were supposed to benefit from the unemployment insurance expansion, such as gig economy workers and self-employed workers, have been unable to access these benefits that they're supposedly due in many states. There may well need to be some type of rental assistance program in the near term for these folks. Thank you.
Thank you, Laurie. That's excellent. Appreciate that information. John, you've been writing about and working with housing and home building for a long time. What do you recommend for home builders now, both single family and multifamily?
Thank you, Kent. When I was listening earlier in the program to folks, it made me think that there are generations of knowledge in the community. There are generations that have been passed along in terms of what people know, in terms of how to deal with adversity, with great change, with emergencies. So at the same time, a moment like this is not necessarily so much about knowledge, it's about learning. And I think that the community is really at a point where learning is almost more important than what is known. So when we're dealing with a moment that's all about lives and livelihoods, putting priorities first, and I've seen the community respond extremely well to prioritizing health and safety in the community. And I think that goes across the board. The other thing I would just say, and I'll just be brief about it, which is that whether it's single family or multifamily, I think that the answers we see in the efforts of the winners in the Ivory Prize today have to do with the fact that there's no single player that's going to make changes here. It's an ecosystem. There are a lot of interdependencies, and understanding that it's a community that is going to solve the current problems, the current crisis, that will really sort of be key to the near term and the longer term planning for viability. So that's what I think about the response of the industry to now.
Thank you. And I just read the article you did for Builder Magazine, which talked about how important what we can learn from the top 10 finalists for the Ivory Prize are in this COVID-19 era. So thank you for that. Ryan, you're an expert related to industrialized construction. What impacts and solutions related to the construction of the homes do you have to share with us?
Thanks, Ken. It's no question that with construction sites shutting down in many of the states, and it's going across the United States, that this has significant impact on the companies that deliver housing, construction companies and trades, and the workers in particular, many of whom are not working currently. And this adversely impacts disproportionately smaller construction outfits. So the average size of a construction outfit or enterprise in the United States is 9 employees or less. And so the large majority of construction companies will be negatively impacted by this downturn. We've also heard from others on this call, on this panel, that economic depressions impact affordable housing development disproportionately. And so in the short term, this will be a challenge. There's no question about that this is going to be a challenge. And my heart goes out to all of my colleagues across the country who are currently experiencing this, and the downturn that we're also experiencing will be forthcoming. But what about the future, and how will COVID-19 impact for the future? Many have said that post-COVID-19, nothing will be the same. And I don't necessarily believe that. I think perhaps it will be more of the same, just accelerated. So what I mean is the same issues that design and construction has been experiencing before the pandemic, by way of labor shortage, increasing prices, the culling of companies, as well as consolidation of companies in construction, will probably occur at an increased rate. COVID-19 is just making construction industry future happen faster. And unfortunately, this acceleration due to the crisis will accelerate the housing crisis as well. Fortunately, however, I think that innovation, invention will respond to this housing crisis post-COVID-19 and will industrialize methods of construction, the area that I look a lot at. Things like vertical integration of companies, partnerships along the supply chain, greater data gathering and management, and a flight to quality and healthy buildings, as well as more development of standards across the industry to make it more competitive. So I think those are some things that we'll see in the future post-COVID-19.
I think all of you who are on the broadcast today can see what a great panel that we have in terms of the advisory board. We're now going to impose a 1-minute rule. We've got some questions, but we're going to ask you to just sort of focus in a short period. Chris, I'm going to ask you first. Clark already got into this a little bit when he was talking to the winners of the new Outstanding Public Achievement Award related to the zoning changes in the city of Minneapolis and Oregon. And the question, and Clark began it, but maybe you can wrap it up. They gave some answers, but how in the world did these two, one city, one state, do it when so many others have tried and have not been successful in implementing these kinds of changes?
Well, you know, maybe with a little bit of prescience, last fall when we had an event at Harvard celebrating last year's Ivory Prize winners, we actually had Minneapolis and Oregon with us, and we asked them this question. And so what's interesting is the two of them answered that question quite similarly. And it starts with a question about framing the issue as well as community engagement. You know, and Minneapolis in particular, but Oregon as well, really framed this as a question about racial justice and racial equality and issues about racial disparities over time and needing to overcome that. There's also issues around climate change and resiliency, issues around responding to sprawl, in Oregon responding to mansionization. And so in both places, there really was a real effort to make sure that people understood how this approach related to the fundamental issues that people were dealing with. And I will say, I think that the way in which the housing affordability issue has become so endemic and affects so many people broaden the appeal for this issue. So it started with really community engagement and framing the issue. Secondly, a key important part in both places has been strong political leadership. In Minneapolis, the head of the city council, the mayor were strong champions for this. In the folks today mentioned Tina Kotek, the House Speaker in Oregon, was a strong leader of this. She had strong support from the governor and in the Senate as well. So strong political leadership. And then last, a really strong advocacy community. And so you had the 1,000 Friends of Oregon today, you had Minnesota neighbor to neighbor. So I think you need all that. You need framing, community engagement, and education. You need strong political leadership. And lastly, you need to have strong advocacy. And with that, both of them put through what seemed like a very difficult proposition, but passed quite overwhelmingly, and so far has been embraced.
And on this one, I want to echo what Clark said. I think that with COVID-19, the roles of state and local government as we go forward in terms of changing and removing some of the regulatory barriers will be key to our success in getting out of this pandemic crisis. Ryan, real quickly, one of the questions was, what is the most significant change in the housing industry that you see coming in the next 20 years? Can you give us the 30-second version of that?
Sure. I think the next 20 years will look much like perhaps Japan and Sweden's housing industry in the past 20 years. So if we look to our future and what they've gone through, they're much more mature housing industry, especially on the industrialized construction front, I would say. And what that looks like is fewer companies delivering greater portion of the housing solutions in cooperation with government, as we've heard in the last comment. So the next 20 years, therefore, perhaps will look also much like the car industry in the past 20 years. Consolidation, integration, vertical alignment as a function of economic necessity, the need for energy efficiency and gains in productivity. That's what I see in the future.
That would be fun to have a lot of discussion on, but we'll move on. Let's go to you, Natalie. Before COVID-19, I know that Utah felt they had a housing affordability crisis. With the pandemic, what's going to happen now with respect to Utah and housing affordability?
COVID-19 is not a short-term problem. I believe it's a new risk that we have to manage. And there's a lot going on both the supply side and the demand side. I expect the economic disruption will send many suppliers and buyers and sellers to the sidelines. Construction and rentals will all be impacted. In Utah, I expect fewer building permits to be issued, perhaps as many as 25 to 30% less. I think Utah's housing shortage will remain, but we will have less new supply and lower demand because of the crisis. And so the way I look at it is all of this just makes the innovation celebrated by the Ivory Prize all the more important as we try to create value in this risky environment.
Thank you. Laurie, real question for you. How hard is it going to be for people to get a mortgage after COVID-19?
It's already gotten much more difficult to get a mortgage in the wake of the pandemic. Even for loans that can be sold to Fannie Mae, Freddie Mac, or the Federal Housing Administration, many lenders are increasing the credit score that's required, increasing the down payment that's required, or decreasing the allowable debt to income ratio, and in some cases requiring reserves. They're trying to use existing available resources to service existing customers that want to do a refinancing. In addition, they're concerned that if someone gets laid off quickly, they're going to be in a position of having to either make best case, make the payments the borrowers would have made only to get paid back much later, or worst case, buy the loan back. And for many self-employed borrowers and those that rely on bank statements, the situation is even worse. The non-agency market has largely shut down. If a lender makes a loan to a self-employed borrower relying on a bank statement, 8 weeks ago he could have sold the loan he made at a price of 100 at 103. Now he'll take a loss on the loan and he won't make it at all. I expect the very tight credit conditions that prevail now will ease up in the next few months, but it'll remain much, much tighter than before this pandemic. Jobs have disappeared for good, and some of those that remain will pay less. Home prices are apt to be down, and lenders are apt to be much more wary to lend under a situation of declining home prices, at least in the short run.
I wish you had better news for us, but I think it's also important to be realistic. Carol, I'm going to ask you one, and obviously I know you could take 2 hours on this, but what do you think is going to happen in the housing market for the remainder of this year and beyond?
So I'm going to be very brief, and I want to just say, I think gave the answer, which is this is an unprecedented situation. We can, prognosticate about what's going to happen, but I don't think we really know, how deep, how difficult, how bad this is going to be for housing markets. I think we really just don't know all the implications. I think what we do know is that unless we're very intentional in our policy about this, that we will exacerbate what is already an unequal access and unequal opportunity in this country for people in lower wage jobs. And, that is just going to be much, much worse unless we, really put some intentional floor underneath that situation. Because, those of us who are sitting in our living rooms or offices in our homes who have stable jobs, you will be fine. But there are so many more who don't have that stability. And this recovery is obviously going to be much, much more difficult for them unless we, are much more intentional than we have been so far.
Thank you, Carol. And John, you've spent years at Hanley Wood thinking about innovation as it relates to housing. Out of this crisis, are there opportunities related to innovation that we can look forward to?
Absolutely, and I think Ryan expressed it somewhat by saying that the futures move faster toward us. I think the disposition and the DNA of the people in the community, as I said before, is as problem solvers, and I think that one of the winners expressed that there's really nothing impossible when it comes to looking at a problem and using the combination of the soul and the character of people, and then technology and data that can be brought to it these days. So I really think that even though, as Carol says, the vulnerable are really, we haven't even begun to understand the impact on the vulnerable populations of a little further downstream, but it's going to become a real phenomenon, and innovation is going to be a necessity versus an option at this point.
Thank you so much. Now, our time is basically up, but I'm going to ask the panel one last question and give them a 20-second response. You've worked on the Ivory Prize now. Give me one observation or lesson that you've learned from your perspective from having the opportunity to be a part of the Ivory Prize process. Please, let's just go ahead and Carol, why don't you start?
Sure. Well, I would just say it's been incredibly educational for me, given and inspiring, being able to peek into all of these incredibly innovative companies. But I think the thing that has struck me the most, particularly given COVID-19, is the ability of these entrepreneurs to pivot their business models, or just be nimble in how they are responding to the current situation. That is also putting them in a good position to continue to innovate for the future.
Thank you. Natalie.
Kent, I'm going to go with the importance of compliance over enforcement, emphasizing compliance. There's an old adage that you should, in public policy, make it easy for people to do the right things. And when I was, checking out what Symbian had done with the computational law platform and helping to speed up the permitting of ADUs, or Rhino helping people with their security deposits, I could just feel that what we're trying to do is help people to do the right thing through our tools and our innovations. And I think that's something that was very evident in all of the finalists.
Thank you. Laurie.
Yes, so I spend most of my time on housing finance, and I've just been struck by the creativity of the applicants, the thoughtfulness of the solutions, and the wide range of issues they are addressing. So, for example, if you look at the top 10 in the finance category, it just included everything to help renters build savings, to Rhino the Winner, which helps people with their security deposits, to a platform to help renters use their rental payments toward their credit score, a nonprofit that helps resident-owned manufactured home communities. All of these entrants help lower the cost or increase the availability of housing for homeowners or renters, and the creativity of the applicants has just been incredible and a real pleasure.
Thank you very much. Chris, please.
Well, I think my advisory panel members have said it, but I think one thing that's just been amazing is to be able to see the range of creativity and energy that's out there. America really is an entrepreneurial country, and I think when you work in the housing space, you can get dismayed by the affordability issue that's been pernicious and lasting. But I think that this being part of the Ivory Prize has given me hope that, in fact, with this incredible display of entrepreneurial zeal across the spectrum from businesses to the cities and state of Minneapolis and Oregon, there's hope. We say sometimes we're looking for a silver bullet solution, and the housing system is so intertwined and so complex. What we really need is a silver buckshot solution. Clark Ivory, through the prize, has helped to elevate these ideas. I love hearing Jerry McCaffrey talking about the fact that he would love to see his approach adopted by more firms. Like Rhino would love to see their model adopted. So I think through the Ivory Prize and through the work of the advisory panel, I hope these ideas get disseminated and expanded, because we certainly need it. And it's been a pleasure to be part of it.
Thank you. John.
Yeah, I've been astounded by the impact of particularly the young, fresh minds that have been taking on some of the problems that have been impediments, that have been challenges to people who have a lot of wisdom and a lot of experience. But these younger folks that have come into this community have really signaled a pivot to what could happen differently and boldly, and really solving problems that we never could have imagined. So I just am grateful for what the Ivory Prize is doing.
Great, thank you. And Ryan, last but not least.
Yeah, I think in this, what I've been observed and really heartened by is that innovation really happens at the overlap of the different categories: policy, finance, design, and construction, as those things come together to solve a problem. And so just on behalf of the panel, thanks Kent and to Clark for involving us, and thanks to all the companies who submitted.
That's great. And my observation is when we started this, when Clark started it 2 years ago, it was very important. Now with COVID-19, innovation, technology, and solutions are even more important. And housing will be very much a part of leading to the recovery, which will happen. Thank you.
That's great, Kent. And I just want to thank everyone who's been in our audience today. I also want to thank our panelists. Truthfully, I am very optimistic, and that's the way to be. This is the spring of hope. We need to be more optimistic than ever before. When we focus on solutions and not just the challenges, we do so much better. Let's all go out and be innovators. Let's all go out and be those that drive for solutions and don't focus entirely on the challenges, but move forward as a spring of hope. It awaits. That's it. Let's go.